So the crypto market continues to push up a little higher, and we have a whole lot that we need to look at today. As the title suggests, today I'll be outlining my thoughts on how I plan on buying, call it the dip, and getting back into the market. So without further ado, let's get straight into it. It's going to be an important show. We have a whole lot that we need to cover. And I see already comments over there about FTX, and that's what I wanted to start on with. SBF, I don't know what's going on, guys. This is absolutely crazy. He's made this whole tweet thread here, and he says what, and it basically spelled out happened, and he finished off with number 10, not legal advice, not financial advice. This is all as I remember it, but my memory might be faulty in parts. And seriously weird stuff going on here. I don't really understand it. Pentoshi basically shared question marks, and he showed this from Sam over here on the right-hand side. All these tweets from Sam Trabucco, which basically end with what happened, what happened, what happened. And this is from May the 19th of 2021. And actually even as early, if you look here, as November the 22nd of 2020 were some of the tweets where he finished off with what happened. And the conspiracy and plot thickens over here. It's absolutely mad. I don't really know where this is going, but you have Garvin. He says Sam Bankman is spelling what happened word by word, likely to send someone a message. And then he says, you know who else uses that? The co-CEO of Alameda, which, as you know, there was all the ties between SBF and Alameda. And he says, who left weeks ago, which is Sam Trabucco. Sam Bankman tweeted something about a sparring partner days ago. I think that person is Sam Trabucco. So as I told you guys already weeks ago, watch this space, because this story will get deeper and darker in my personal opinion. It's absolutely wild, everything that's been going on with this whole FTX saga. And Balaji says here, what caught Bankman, so Sam at least, not the SEC or the CFTC, it was cryptography, self-custody, people withdrawing cryptocurrency because he could capture, it says because he could capture regulations, legally bribe politicians with donations, and fake app balances via centralization, but he couldn't beat Bitcoin's verification. And this is why we're here within crypto, is for full transparency, not your keys, not your coins. You want to be in control of your finances, and that is probably one of the reasons that you're in the space. Well, let's be honest, most people are here because they want to make money. They initially get in because it's a get rich quick scheme, but over time you start to find yourself more as a bit of a freedom fighter, wanting to take back the power into your own hands. And at least that's why I'm in crypto. But obviously TA has saved me a whole lot of money and made me a whole lot of money, and I hope that I can pass that on and pay it forward towards you guys, so that you can also buy near the bottom and sell near the top and maximize the opportunity within the space. So we have a lot to go through, and I wanted to cover this. It says October CPI breakdown and its impact on the markets. A thread this week saw the first substantial miss on projected CPI to the downside, and the market reacted with fervor. So as you would know, CPI came in below expectation, and therefore the market continued to rally. I won't go through this whole thread, but you can look up reflexivity research if you want to find out. The point that I wanted to make is that Brainard has said that it probably will be appropriate soon to slow the pace of rate rises. And with that being said, that might mean that it is time to really start getting back into the market. And as you know, if you've been watching the show for quite some time, I did outline that is what we have been doing. We have a strategy of entering 25% of our capital in on a capitulation candle, and the other 25 to 50, depending on what you're comfortable with, you're looking to dollar cost average into the market over the next 12 to 18 months. So the next year to year and a half. And when you see things like this, the Michael Burry stock tracker, and I've outlined, they have a whole bunch of these for different high level, high profile people within the stock market, and him being one of them, who was of course the guy from the Big Short. He shows here breaking. Michael Burry is back buying stocks again. You have in Q3 purchased more of these stocks over here, and then he made new buys within these different holdings, and his portfolio is now over 50% in prison stocks of all things. Absolutely crazy, but nevertheless he is buying, which means that he does foresee something within the market possibly turning, and that could be a potential pause or pivot that might happen in the next 3 to 6 months. So keep an eye out for that. Bear in mind that you want to focus on yields. The yields will tell you everything that you need to know. You don't need to try and guess when the Fed is going to pivot. If you see the 10-year yield break down, that is your signal to enter. It hasn't broken down yet, which is why I haven't been showing it for some time. It's not relevant, but we will bring it up when it does become relevant. In the time being, you do want to dollar cost average at the very least. Glassnode has shown over here in direct response to the failure of FTX. Bitcoin investors of all wallet cohorts have made a distinct behavioral shift towards self-custody. Of course, a run on the banks, run on the exchanges, big panic. And you have from shrimp to whales. By the way, shrimp, whales, these are just analogies that they give to different holders depending on how much Bitcoin they own. And it says Bitcoin on-chain balances are on the rise, and you can have a look at that. Pretty much everything is going off-chain at the moment, at least for safety and security. And the purpose of exchanges, guys, just for a quick explanation of at least why I use them, is leverage trading is actually meant to be used to reduce your risk. And I've actually told you guys this probably a dozen times since I've been doing these shows. For example, if you want to trade with $10,000, then you can put $1,000 on the crypto exchange of your choice, and you trade with 10x leverage, so that you're trading, because 1 times 10 is giving you a $10,000 position size. You're not trading with, when you only have $1,000 and you're like, hey, I want to take a $50,000 position, and now you're going to trade with 50x leverage. That's not the way that it works. You're actually putting $1,000 on the exchange because it's calculated based on your risk of what you can lose. So if your stop loss gets hit, maybe you lose, I don't know, maybe you lose like $200, which would have actually been, so $200 out of the $1,000 at a 10x leverage size. That means that you would have lost $200 out of your actual $10,000, but you only wanted $1,000 exposure on the exchange. I really hope that makes sense. Please let me know in the comments below if it does or doesn't. I'll go read through them after the show. If it doesn't make sense, I'll try and put like a tweet thread of a better explanation, but I think that should hopefully help. So Dylan Leclerc shows here, following the collapse of FTX, we've just experienced the largest week-over-week decline in Bitcoin on exchanges ever, and that is 115,200 Bitcoin, which have been removed from exchanges. And you'll see there's Nansen reports that are coming out now where you can actually check your exchanges to see if your exchange at least is safe. We've done our due diligence with ours, and we believe from what we can tell from Nansen reports that they are okay for now and good to go. Of course, we can't speak for the future and whether that's going to change or not, but for now, they do look all right. So he says, yeah, a couple of things that I'm watching closely. This is with regards to the Bitcoin price. CME futures have never traded this far below the price of spot BTC, which essentially creates a backwardation environment, as I mentioned yesterday. And when there's backwardation for long periods of time, or extreme backwardation, that is essentially where you want to start looking to position yourself into the market, not saying with leverage positions, but at the very least spot positions. The great thing about spot is you can't get liquidated, right? There's no chance of liquidation. You just become a longer term investor if you are wrong, but you won't be liquidated. And he says, CME futures open interest is also at an all-time high in BTC terms. And he says a whole lot of fiat denominated short positions that will eventually get wrecked. And I do agree. I've told you guys, you're looking for high volume. You're looking for extremely high open interest rates. So funding rates, also funding rates should be extremely negative, meaning that they're more positioned on the short side. Everybody is shorting the market. And then also looking for backwardation. When you have those elements, you start to find a bottom. But the question is, where will that bottom be and when will it be? And I'll show you the levels that I'm looking at in just a moment's time when I get onto the actual charts of the day. Okay, moving on to this over here, stock money lizards. And he says, boom and bust in their purest form. After Mt. Gox disaster and COVID-19 pandemic, the first external black swan for Bitcoin, we now see the FTX tragedy. some players on the edge, and you have Crypto.com, KuCoin, and Binance. It remains exciting while all indicators are calling oversold. And I do like this account, Stock Money Lizards. What's he got? 37,000 followers. However, I'll definitely caution you on that wording that he used there: oversold and overbought. No such thing. Forget it. Take it out of your vocabulary when it comes to trading. There is no such thing as oversold. However, the trend is pretty interesting, where you kind of have this lower band over here that is holding and respected all of these levels. But these can be adjusted, right? Like, let's say this price goes lower, they'll adjust this lower band. All they have to do is click over there and pull ever so slightly to the downside, and that could create a variation of $10,000 difference in the price, meaning 16,000. Now the new low is at 6,000. So be very careful when you look at these kinds of posts. And the RSI is still trending down. That is a bad thing. Yes, it is in generally the area where you would expect it to eventually start to turn back up, but it hasn't done so yet. And you want to be patient. And I'm going to show you the levels that I'm looking at and how you can strategically enter into the market near the bottom, because we all have this deep desire where we want to buy the bottom for whatever reason. We don't want to miss that last little bit on the bottom. I understand. I've been there. I'm sure you think the same way. You feel like you've missed the train or whatever. If Bitcoin, let's say the bottom was 15.5 and then Bitcoin is now like 19.5, and the trading system then gives all signals to go long, then in your mind, you're like, how can I be going long at 19.5? Look at this. I've missed 100% up move, and everybody starts to freak out about things like that. So this is why I'm trying to cater and help you from an emotional standpoint to at least capitalize on some of the capitulation, which I'm sure you guys are itching towards. But the best thing to do is to wait for confirmation in actual fact. So some important things to consider with regards to this tweet over here and why things could go lower. So he has FTX labeled over here, but I have to question, what happens if MicroStrategy got liquidated? What happens if Michael Saylor got liquidated? That, I think that could take things down a lot further. And when you look at this tweet from Steven Rosen over here, he says, MicroStrategy update. Important margin calls next level at BTC is $13,500. Under the March 2025 Credit and Security Agreement, MicroStrategy must maintain more than $410 million Bitcoin against the $205 million loan. If the loan to value ratio falls below 50%, MicroStrategy must post additional BTC to reduce the loan to value ratio to 25%. So that he has to maintain a certain ratio, meaning he has to actually have a real Bitcoin that's being held so that they don't take the collateral against the loan that he has. And he says, in June 2022, when BTC dropped below $20,000, MicroStrategy posted an additional 10,585 Bitcoin to reduce the loan to value back to 25%. If BTC falls below 13,500, MicroStrategy must post approximately 15,000 additional Bitcoin. In total, 45,000 Bitcoin would be held as collateral. So can you imagine? If he gets liquidated, that's 45,000 Bitcoin gone like that. That will be catastrophic. That will be a real black swan event, worse than the FTX situation. And he says currently 14,890 BTC are held as collateral against the 15 June 2028 debt. Therefore, 60% of MicroStrategy's BTC holdings would be acting as collateral. The 2028, which is 6.125% bond yield, 30%, which is partially collateralized and senior equity equals zero. So pretty scary. I like what Richard Hart said under here. And that's a saying that I've heard so many times. It's ladies, liquor, and leverage are how smart men go broke. And the dumb ones too. So pretty much you need to stay away from that stuff. You need to control when you do take on leverage. It should be a very minuscule part of your overall portfolio and how you trade. I was very fortunate that when I first got into trading, I wasn't exposed heavily to leverage trading, because back in 2017, it was a little bit more difficult and complicated. You had to trade on like BitMEX, and it was just crazy. It was a crazy exchange. And I'm thankful that I got to go through the correct foundational upbringing in the crypto industry and learning things the way that they should be done, which is focusing on spot trades first, and then only later do you go into leverage. So keep that in mind. And for those of you that are out there, I know you may be saying, well, no, MicroStrategy doesn't get liquidated at 13.5. We'll need to check and verify into that, because I have also heard rumors about as low as $4,000 is the liquidation price. But Stephen is actually a pretty reliable source usually, so I thought it would be worthwhile to showcase this. So moving on to the actual charts now. Now, what I wanted to show on here is, of course, we are getting a small push up within the market. Now, I'm going to zoom in on this. Have a look at this. This is again, the Bitcoin volatility divided by the VIX. And you can see it began to get lift off over there towards the upside. And price continued to go to the downside. But now you can see price is slowly bouncing, and that is ticking back down towards the downside. Now, typically what you might see with these volatility indicators is it might actually squeeze down like that, and then the big move might only come later on in the year. So don't think that the bottom is necessarily in. I definitely think that this volatility indicator at least needs to track up to anywhere between this 3 and 4 point level before the move has properly played out. And therefore, if it does squeeze back down into the orange line and then expand off of there, and price is still trending down in a downtrend, which it is, we made a new swing low, that means that you should expect that is probably going to happen. That means that the capitulation is not yet over. And a lot of people have asked me, well, how would you know if it's a capitulation, irrespective of the other things that I gave you, which is extreme backwardation, high volume, negative funding rates, those different criteria? Well, you'll know that it's a capitulation event, because most people are going to get wrecked. Exchanges go offline, so usually you can't place your orders if you haven't already pre-placed them. That's the one thing. The other thing is that you'll typically see Bitcoin price move down above 25% in a single day, with altcoins going down more than 30, 40, even 50%. Low caps will drop potentially even 60% in a single day, and we haven't seen that yet. And that's typically the way that the market cycle tends to reset at the major bottoms. So that's why you need to come with a strategy with the way that you want to enter into the market. Okay, weekly chart looking over here, still Bollinger Bands are expanding, meaning that, again, the volatility is still currently present and risk does remain to the downside. And from a candle perspective, you always look at the previous week and you ask yourself, well, based on the previous week's information, what can I deduce from that? And what you can deduce from this is that you're most probably going to have another continuation week to the downside. I know it's Tuesday and we're having a little bit of a bounce, but technically that is what the chart is telling you. Now, in another thing that I wanted to mention is, with a capitulation candle, usually you're going to see it with a massive wick like that to the downside, and then the week will end like that. So I hope that makes sense. So the week will end like that. That's your candle, right? I know it's not perfect like that, but you understand what I'm saying. There is your massive wick that's left to the downside. Now, if you look at the prior week's candle, does that look like a capitulation candle to you? That doesn't look like a capitulation to me. There's only a little tiny wick to the downside. I want to see a massive wick the way that I saw in 2020. As well as in the 2019 bottom that we formed over there. So keep a close eye on that. And this is my favorite chart at the moment to be using. Again, we've spoken about a lot. You got range 1, range 2, range 3. You have the diagonal trend line connecting the lows all the way back from 2017, 2019, 2020. And if it were to play out like this as a deviation, so looking at this as a range trader, you would have your primary ranges, over here, over here, over here, and you want to see price dip down, tap the diagonal, and immediately bounce up. That's where your massive wick would get left behind. And that would be an ideal scenario for a bottom for me. I would accumulate quite heavily in this area over here with a tight stop loss just below. So one thing that I'm keeping an eye out, just to give you some perspective. Another very, very important thing is this chart. And I have brought it up before. Again, it's the 2018 compared to now, but it's a descending triangle. And I went and I checked this morning the measured move of that triangle. from here to here. You can always measure them out. It measured it down to 3,288. The bottom came in a little bit lower at 3,162. When you measure this triangle from top to bottom and you work out the measured move, it's got the measured move at 11,818. So this is the part of the show where hopefully the alpha kicks in, and you give this video a like. Firstly, I'd really appreciate it. Give the video a like if you do enjoy it. And now I'm going to tell you how I would place my buy orders. So first and foremost, I'll show you on the low time frame, but you can expect that at least some of this wick on the previous week is probably going to be tested in the coming days to weeks. So what you typically want to do is I always do it like this. I like to take just a general area. This is for part of your portfolio, not your whole portfolio. And you say to yourself, well, if this is where the capitulation is going to take place, then of course I want to enter into this area. So within the circle is where I plan on making 25% of my purchase. So you don't need to go like trigger heavy and just bang your whole 25% in one go. What you can do is you can go and you can layer your orders throughout that circle. So I've shown you how to do this before on BitGet. If you guys are unfamiliar, I'm going to very quickly summarize it for you. You have to do your own research. Go look at one of my other videos. But a lot of the exchanges offer it. I think BitGet, OKX, even BYBIT offer it. You want to pretty much set your area. So what is the area? The area is going to be about 16,200, which I'd already given you this a long time ago, 16,200. And you want to go all the way down to 11,500, because that's where you expect the entire capitulation to take place. Now, you can set it manually. So you type those orders in manually, 11,500 to 16,200. Once you've typed that in, each line over there, entry, order one, and then order two, you can split it with grids. And you can set, I think, up to 28 different grids. And therefore, it will enter you in bit by bit. So it would look something like this. If price came in, let's say it went in like that, and it bounced out. Now, out of your 25%, half of that would be entered. So what's that? Like 12.5. So 12.5% of your capital would be entered. Now, let's say that's it. That was the capitulation. It's over and price continues on upwards. Are you going to come to me and cry that Kyle messed up my whole trade idea and I'm wrecked? No, your 12.5% is already going to be up by the time it gets here, a couple of 100%, and you are going to be in huge profit. Yes, you missed out the last 12.5% over here, but so what? This is how you create good risk management. So entering bit by bit by bit by bit like that, and you can set it up so that happens automatically. You don't need to sit there manually waiting while price is crashing. So what would that mean? If this were the exact capitulation, pretty much you can take the midpoint of this. That means that your average entry, because it's going to be all of these 28 orders or whatever you set the grids to, divided by the difference, and that's going to give you an average entry of about $14,000 on your 25% capital. The other 25 to 50%, you should already be dollar cost averaging. So let's assume you're working on $100,000 or $10,000, just for the sake of round numbers budget. Then basically here, if it's $100,000, you want $25,000 bids spread over here. $10,000 would be $2,500. And then for dollar cost averaging over the next, I would say 12 to 18 months, you probably want to go as much as 50%. Over the next 6 months, I would say 25%. So that's another $25,000 you want entered over 6 months. And you just simply put in on, I would say, a daily basis for the next 6 months. So whatever, $25,000 divided by the number of days in the next 6 months. And then you leave the other $25,000. So remember, it's 25% in this area, 25% for the first 6 months that you're dollar cost averaging. And then the last 25 months is going to be from month 6 to month 18. And that you're going to also divide up. And that's how you get a perfected entry into this market. Then you're left with your last 25% of capital, which you can enter into an uptrend, which may already happen before the end of the 18 months, meaning that you have an extra safe entry into the market. So that is basically the way that I'm looking at it. I know it's a little bit long, but I really hope that helps. Okay, very quickly on these charts, same thing, stuck below the moving averages, not good. The S&P 500 coming into that zone over there. Dash line is the area where I was looking for rejection. So far, it's looking like a rejection candle, but I do think that this can push in a little bit higher. Of course, correlated to crypto, so keep an eye on that. This over here, we have the lower side resistance still at 18.2. Nothing's changed over here. This bounce, if it potentially comes into this zone, I'd be getting out of small illiquid altcoins that I wished I was never in. I'm not in any of those, but if you are, that's pretty much the way I'd play it. 4-hour chart, moving averages all angled down, price stuck below them. Let's see if it can maybe push up to the 50 EMA. If it breaks through that, again, as I mentioned, you're going to reach the prior range low, which is going to match up with that moving average. This is going to be a lot of resistance in this area. So, I just closed that. Let me just reopen that tab. Okay, last thing I wanted to focus on is, I think it's the hourly chart over here. Let's just let that open up. Anytime now. Loading. Oh my gosh, trading view. Okay, there we have it. So hourly chart, just let it load up. We got our range, right? Yesterday I put this on Twitter. I also put in the Discord group. Link is in the description below if you want to be in the Discord. I said this is the area where this candle will be retested. Let me delete the yellow line. That was just a marker for something else. I said this area will be retested because it's an inefficiency candle. So they call it a fair value gap. It's another word for it. And typically price will always come back. It came directly into it, and now we've pushed up. We're back towards mid-range. This is basically going to be the chart where my focus is on for the rest of the week. I did also say yesterday that I would not be surprised to see mid-range reclaimed, hold above there, and then you can pretty much put your stop loss under the next higher low, wherever that may be, and you'll be targeting towards the range high. Once you get to range high, this is the area where I get very, very defensive, and I start to look for short opportunities, expecting maybe a push over the range high and then deviate back below. And then that is your short entry for lower prices. So I hope that helps. Very, very important. I wanted to look at this tweet over here. I'm actually going to retweet it. Let's give them a like and a retweet. Feel free to go have a look at this, because this is some of our sponsors over here. So OKX is one of mine. It's a Nansen report. So they basically said, to make exchange holdings easier to understand, below are both their relevant portfolios and associated explanatory assessments. And at least according to this, OKX is okay. You can click on that portfolio link if you want to have a more in-depth look into their holdings and the way that they have everything split up. That's all on chain, so you can take a look at that. They've assured us that they're fine. Quick touch on NFTs. You can mint these for free. This is the one that I got. Germany. I like Germany for Soccer World Cup, Football World Cup. It's currently on at the moment. What you need to do is use my link in the description below to OKX. Click on the link. You'll see a page like this, or you can do it on a mobile device. Say OKX Football Cup NFT. Click on that for the free mint. It will take you through here, and you can mint pretty much any of these that you want for free. It's for the first couple of thousand people, I think, and it closes in 18 days, so towards the end of the World Cup. Germany, Argentina, Brazil, of course, are the current favorites. It's free to mint. Of course, the only thing you're paying is the gas fee. So you'll connect your wallet, make sure you're using a nano ledger, always keep your funds safe, and then feel free to mint away. Link again is in the description below over here, the OKX link. Give this video a like. I would really appreciate it. And that's it from me, guys. I think that brings us to the end. Let's see what today brings. I hope that all helps. Please, again, let me know in the comments what you think about the strategy for entering into the market, what your thoughts are. How are you doing it? Does that make sense to you? Do you have any questions? Also, let me know in the Discord, in the general chat, and the trades and analysis. I will see you all on the next video. Appreciate you all. Cheers for now.